Hello, 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 and a massive hello to everybody. This is 50 Pips, rocking and rolling, 3rd of July, 2016. No trade calls and recommendations. We're responsible for the own stuff. We're here for educational purposes only, and the fact that you're listening to this means you've read, you understand, you accept all disclosure disclaimers on the blog, understanding that we're just performing some technical analysis in a learning context for educational purposes only. So, wishing everybody an excellent 4th of July weekend. Let's see what's shaping up, and let's see what the charts are saying. So, again, keep in mind we should have a fairly interesting week ahead, right? We do have some interesting data points out of the UK. We've got data points out of Australia. We've got an RBA rate statement. We've got Carney speaking. We've got GDT price index. We're going to have FOMC meeting minutes, the ISM. We're going to have the BOJ on the wires. So again, there's more crude data. So again, there's quite a lot of stuff going on. And then the little cherry on top is Friday. We've got that non-farm data is being released. So again, we could see interesting action. Also, keep in mind that usually there's heightened volatility the week back after the 4th of July. So keep that in mind too. So what's going on? I'm going to try and keep this fairly concise. I mean, in terms of the ES, I'd really encourage you to look at the latest weekly outlook we did, because not an awful lot has changed, right? We're still stuck inside the range. I mean, the big difference, right? The big difference is that we've experienced a very aggressive velocity of move inside range, with that very aggressive move off the 2000 back into the 2100. But I think that also highlights, again, I don't think anybody was expecting that kind of velocity of move inside range. Most people were looking for the little pop back up and 2050s to find offers for a little test of the 2000 and possibly lower. So again, I would suspect the move caught most people off guard, at least in terms of velocity, right? We clearly were not expecting to see this rip that quickly back up to the 2100. But what's important is going back on what the discussion we had last time about try not to have a bias, and try and understand that when the market is ranging, it's really important not to be confused with velocity of move inside range. And there's certain times where you just have to be patient, and you have to let it play out. You have to let it break outside of that range. So we've been going on about ages, right? 2100, 2050, 2000, and you see no close below, no close above. Now again, have we had very aggressive moves to the downside and back to the upside? Sure. But the key point here is still that we're stuck inside of the range. So we can make the same way we made a bearish case last week, we can make a bullish case here. But as long as we don't close outside that range, we still have to respect that range, okay? I would not be surprised to see this come back down and hover and stabilize back around the 2050s. Would not be surprised to see this rip higher, try and press new highs. Would not be surprised to see this come back around the 2000. Does that mean that we have no idea what's going on? No, we just understand that we're stuck inside this range, and if we close above the 2050s, we'd say bullish case accelerates. If we get a weekly close below the 2000, bearish case accelerates for a move lower. As long as we're stuck in here, expect to see two-sided action, expect to see velocity of move inside range, and these 2050s to be the pivotal marker inside. Again, we discussed this a lot more last week, so you might want to go look at that. Crude, what's going on in crude? Again, it's really stuck. We did say that you had to respect this low, and here it did try and get a close below this 47, just couldn't get any traction. Risk off, risk on, trying to play around here, and basically unless we start to get some momo above the 51 or below the 47, it's very similar to the ES in terms of a lot of chop in this area. We discussed this a lot last week too, so I encourage you to go look at that. Silver, we've actually pretty much completed our move. If you remember, we talked about the fact that we were stuck inside this range, and what we liked was the confluence here on this rotation higher. We liked the fact that it was coming back into mid-range. We liked the fact that it was coming back into the channel low, right? We like the fact that it put in this nice little bullish close at the 50 back of the move higher. And what we were looking for this to move back up to stall into that high range because we always respect the range. We got a little stall, and then to ultimately break higher into 123 extension and ultimately 150 for a pure symmetrical move, right? So that's pretty much done, right? It looks extremely bullish here. Would you look into the week, you know, any weakness, especially that doesn't make it back below the 118, you would expect more upside. One thing which I would keep an eye out for, and again, just to make sure, if you look at the 200 on the weekly, the 200 is coming right there again. You know, very nice. If you're looking right back here with the 150 extension, the 200 confluence with this 150 extension. So even if we do press higher in extensions, we would expect to see some profit taking here. Then again, we've talked about more targets to the upside in the other video, but we'd consider the primary move off 16 to be pretty much done here into the 2017s. Okay, so very nice one. We talked about it ahead with all those confluence points, so it's nice to see these play out. Going into the week, yeah, I mean, a lot of people asking about cable. We think, again, very, very heavy. We discussed the two areas into the Brexit we were looking for, and you see how sloppy break above, then it stalled, came back down, sloppy break here, and it's kind of stabilizing here. We'd expect a lot of people to be trapped here, so the only thing you could say is really that any rally, you'd probably find sellers for a retest lower. Our target, extension target to the downside is 128s. So we'll have to see how this trades. Again, it's not something we'd be too enamored with trading an awful lot of chop when it takes one headline to come in to move this, you know, 50, 100 pips. We don't think there's an awful lot of edge playing tight inside the range unless you're managing a bigger swing or you're looking to counter this for a bigger swing. But short-term tactically, we don't think there's an awful lot of edge trading this due to limited liquidity, slippage, tape bombs, etc., etc., etc. Looking at euro, what's going on euro? We've got all these pivotal levels here. Clearly, a lot of people are looking at this 112. I suspect that as long as the 112 caps it, we're still in line for another test of these lows, possibly back above the 112. We'd expect the 113.40s to attract. A lot of people will be talking about the 50 back of this move down. We don't like to fib moves inside range. We prefer to look at fibs as continuation plays at big new swing highs, swing lows. We're not fans of trading them inside the range because you get a lot of false signals. We're not a fan of fibbing a move where most of the move or over 30% of the move is a wick on the daily. So again, it doesn't mean you can't. We're not talking about textbook modus operandi here. We're talking about the way we look at the market, the way we try to use previous experience to stay out of lower odds setups, to stay out of the chop and try to preserve capital and keep powder dry for what we consider to be the higher odds opportunities. But basically all these levels continue to remain pivotal. Our outlook doesn't change. We would not be surprised to see this chopping inside a broader range for most of the year unless something silly happens, right? So going into the week, we feel that the most interesting charts, or two very interesting charts we'll be focused on, are Aussie and Kiwi because all of those rounds of data and because the RBA. So what's going on Aussie? Here, we're still really focused on this 76, 75 area here. So what we're looking at, especially if the RBA doesn't do anything, a possible squeeze higher, but we'd expect to see offers coming in starting at these 76s, protecting these highs, right? So we'll be very interested to see if we do get a bit more of a squeeze, if there's some kind of a shorting opportunity for a retest lower, right? But again, not really not interested here. So what we're focused on are opportunities higher up or further down, but we think that with the RBA on the wire, whether it delivers or whether it disappoints, that will likely give us volatility and opportunity to engage. And on Kiwi, the other thing we're looking at Kiwi here, we'd be very interesting to see this try and take out these highs and any kind of failure here to try and play for moves back down into the 70s or back into these 3 moving averages to the downside. At least That's what we're focused on. Again, guys, thank you so much for the support. Thank you for retweeting. Thank you for liking and everything. Thank you for being there. Thank you for listening to me rambling on about this stuff. And again, wishing you an awesome long weekend. We'll be back on Tuesday, like pretty much everybody else. Again, stay focused, keep it tight, and stay safe, guys. Talk to you guys soon. Take care. Bye-bye. Thank you.